Hello everyone. Welcome to the Stock Minds web channel. Krystal Biotech, Nasdaq, KRYS delivered a standout Q2 2025 earnings report, underscoring both robust growth and improving valuation metrics. With significant year-over-year increases in revenue, profitability, and free cash flow, the biotech company appears to be entering a new phase of commercial maturity. Even though its share price has trailed the broader market over the past year, valuation multiples are leaning more attractive, backed by bullish analyst target prices that suggest attractive upside potential. In this video, we will dive into Krystal Biotech recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Krystal Biotech. Founded in 2015, Krystal Biotech is a commercial-stage genetic medicine company focused on developing curative skin treatments using proprietary viral vector technology. Its lead product, Vyjuvek, is approved in the US, Europe, and Japan to treat dystrophic epidermolysis bullosa, DEB, a rare but devastating genetic skin disorder. Since FDA approval in Q2 2023, Vyjuvek has driven meaningful revenue growth as the company scales its commercial operations. Krystal Biotech is also advancing pipeline programs targeting inherited skin disorders, including lamellar ichthyosis and other rare dermatologic conditions. Krystal Biotech financial performance. Krystal Biotech delivered an outstanding financial performance in Q2 2025, highlighting strong operational execution and accelerated growth. The company reported quarterly revenue of $96.04 million, a 36.65% increase from $70.28 million in Q2 2024. Earnings per share, EPS, also saw a substantial surge to $1.29, marking a 143.4% year-over-year increase from 53 cents. On a trailing 12-month TTM basis, revenue reached $359.21 million, up 116.08% from $166.23 million in the prior year, while EPS climbed 36.22% to $4.91, compared to $3.60 in Q2 2024. Most impressively, free cash flow per share turned significantly positive, rising to $6.20 from a negative 77 cents a year earlier. The company operates with exceptional efficiency, achieving a gross profit margin of 93.37%, a net profit margin of 40.85%, and a free cash flow margin of 51.63%. Profitability is further supported by solid return metrics, including a return on assets of 9.23%, and return on equity of 15.61%, while maintaining a nearly debt-free balance sheet with a debt-to-equity ratio of just 0.01. Over the past 5 years, Krystal Biotech transformed from a clinical stage to a commercial stage company in 2023. Revenue, net income, and free cash flow have been growing rapidly since the commercialization of Vyjuvek in 2023 and are still projected to grow rapidly in the future. Krystal Biotech Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $379.24 million, representing a 30.54% increase from 2024's $290.52 million, and project EPS to grow 51.83% from $3 in 2024 to $4.56 in 2025. Reflecting strong confidence in Krystal's outlook, analysts give strong buy rating with the consensus analyst price target of $206.90, offering a potential upside of 53.3%. The highest target reaching $252, suggesting an 86.7% upside. KRYS stock price performance and valuation. At the time this video was created, the stock was trading at $134.94 per share. Over the past year, Krystal Biotech's stock has experienced a decline, with its share price falling 25.33%, underperforming the S&P 500, which gained 22% during the same period. However, when viewed over a longer horizon, The company has delivered impressive returns, rising 238.11% over the past 5 years, significantly outperforming the S&P 500's 88.6% gain. Despite the recent pullback, Krystal Biotech remains attractively positioned from a valuation perspective, particularly considering its robust earnings and cash flow growth. The stock currently trades at a price-to-sales PS ratio of 13.52 on a trailing 12-month TTM basis, with a more appealing forward PS of 11.37. Its price-to-earnings PE ratio stands at 37.78 TTM, with a forward PE of 29.37. Additionally, its price-to-free cash flow PFCF ratio is 21.03, a reasonable multiple for a biotech company that has recently transitioned into strong free cash flow generation. Based on Fiscal.ai data, if we look at the valuation since 2024, the forward PS and forward PE are below the average. This indicates a potential undervaluation, as Krystal Biotech is still projected to grow rapidly in the future. Krystal Biotech growth potential. Krystal Biotech growth prospect remains strong, driven by several factors. 1. Strong commercial foundation with Vyjuvek market leadership. Krystal Biotech's flagship gene therapy, Vyjuvek for dystrophic epidermolysis bullosa, delivered strong commercial performance in Q2 2025, generating $96 million in revenue, a 36.6% increase from $70.3 million in Q2 2024. Since its Q3 2023 launch, Vyjuvek has amassed $525.4 million in total revenue, reflecting rapid market adoption and commercial viability. The therapy boasts a high 93% gross margin, highlighting efficient manufacturing and value. As the first FDA-approved redosable gene therapy for DEB, Vyjuvek holds a near monopoly in the U.S. market, with about 1,200 eligible patients. The company has secured over 575 reimbursement approvals and achieved 82% patient compliance with weekly treatments, indicating strong payer acceptance and patient satisfaction. This commercial success creates a stable revenue foundation, enabling ongoing R&D investments and supporting growth across Krystal's diverse therapeutic pipeline. 2. Global market expansion and regulatory momentum. Krystal Biotech's international expansion is a key growth driver, fueled by recent regulatory approvals outside the U.S. Vyjuvek received European Commission approval in April 2025, with commercial launches slated for Germany in Q3 2025 and France in Q4 2025. In July 2025, Japan's Ministry of Health granted marketing authorization, making Vyjuvek the first gene therapy approved for DEB treatment from birth in Japan, with a launch expected by year-end. The global DEB patient population is estimated at around 9,000, including 200 to 225 genetically confirmed patients in Japan. The company projects a global market opportunity exceeding $1 billion, with successful geographic expansion potentially adding $250 to $350 million in revenue. Home administration approvals, including in Japan, improve patient access and compliance, supporting long-term commercial sustainability across diverse healthcare systems and regulatory environments worldwide. 3. Diversified pipeline reducing single-product risk. Krystal Biotech's strategic diversification beyond Vyjuvek strengthens its long-term growth and reduces reliance on a single product. Their robust pipeline covers respiratory diseases, oncology, ophthalmology, dermatology, and aesthetics, all utilizing the proprietary HSV-1 vector platform. In respiratory medicine, KB407 targets cystic fibrosis, and KB408 focuses on alpha-1 antitrypsin deficiency, with KB408 showing promising interim data on gene delivery and protein levels. The oncology candidate KB707 achieved a 36% objective response rate in non-small cell lung cancer and holds fast-track designations. Ophthalmology programs include Phase 3 trials for KB803 in corneal abrasions and FDA-cleared KB801 for neurotrophic keratitis. Their aesthetics division, Jeune Aesthetics, reported positive Phase 1 results for KB304 in décolleté wrinkles, showing statistically significant improvements. This diversified pipeline enables Krystal to address multiple disease areas, balancing growth opportunities while managing single-product risks. Risks to consider. While Krystal Biotech looks like a compelling opportunity, we should be mindful of potential risks. 1. Limited R&D investment and pipeline risk. Krystal Biotech has maintained a very conservative R&D budget relative to industry peers, reporting only about $53.6 million in R&D expenses in 2024, which is unusually low for a gene therapy company. This austerity approach may inflate current profitability but risks underinvesting in future product development. The company's current revenue relies heavily on Vyjuvek, approved for a rare skin condition with a small patient population, around 9,000 worldwide. Without significant pipeline advancement or an acquisition, growth could plateau, leaving shareholders vulnerable. 2. Regulatory and legal risks. The company faces substantial regulatory challenges, including compliance with U.S. and foreign export and import controls, anti-corruption laws, and the stringent, evolving regulatory environment for gene therapies. Changes in guidelines or regulatory delays can increase costs, extend approval timelines, or limit market access both in the U.S. and internationally. Negative public perception of gene therapy could also harm the company's ability to gain approvals or maintain commercial success. 3. Market and commercialization risks. Vyjuvek targets a rare skin disease affecting 6,000 to 9,000 people worldwide, limiting its revenue potential to an estimated $750 million market over the next few years. It faces competition, notably from Abeona Therapeutics' EB101. Additionally, reimbursement challenges and pricing pressures from healthcare reforms could negatively impact Krystal Biotech's revenues and profitability in this niche market. Conclusion. Krystal Biotech stands out as a high-growth, profitable biotech company with strong fundamentals, impressive margins, and a promising product pipeline. Despite recent share price weakness, the company's long-term performance, accelerating earnings, and positive free cash flow signal robust value. With low debt, expanding revenue, and analyst forecasts pointing to significant upside, KRYS remains a compelling investment opportunity. For investors seeking exposure to innovative genetic medicine with strong financials, Krystal Biotech offers an attractive balance of growth and value. But remember, this is not a financial advice. What do you think about Krystal Biotech? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.